Hello, everyone. My name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is June 28th, 2022, and I'm coming to you for a second time for the Tuesday live stream. Welcome, one and all. Hope everybody's doing well. What a market, right? It's just sometimes I've noticed, actually, in my experience, that people get more down and more annoyed and more frustrated when we're going sideways rather than straight tanking. Okay, it's just people lose patience. I think that's one of the most challenging things in trading. Just being patient. Doing your analysis, being patient, letting things actually go. And that, I think, is the most challenging things for most investors, right? And that's the reason why people over leveraged, they want results quickly, but that's a hard way to do it, right? I think if you have time on your side, it's a lot easier to be profitable. In any case, you're on this live stream because you're interested in the topic of trading lunar phases, right? Or however I described it. And speaking of which, first let's look and see, one, who's here, two, if I'm even streaming properly. Give me 1 second. Let's see. Okay, I'm live. Okay, let's go. Perfect. Please like and subscribe if you haven't yet. Let's talk about this. And this is something, in full disclosure, that I have not used. But after having done a bit of research on it, I'm going to add this. I've added this to an indicator, a reliable indicator that I will use moving forward, okay? And again, indicators are fine and well, but I'm going to base my analysis, my buying and selling decisions, first and foremost on price action, and perhaps volume, my wave count, right, in that order. So price action, wave count, volume, and then perhaps some supporting indicators. So I ascribe moon phases, moving averages, what else? Things of that nature. These are supporting indicators. They don't tell me what to do, or they don't, give me the go to either buy or sell. They just support decisions I may make. Okay, it's just helpful. And one of the reasons I had a serious look at moon phases is because this isn't just a gimmick, okay? You may have heard of it before, in crypto as like something that some people do, maybe on crypto Twitter, or like it's very interesting and some people are embarrassed by it. But if you think about it, it's basic science. It's natural science, okay? A lot of our world, the movement of the tides, the our general psyche, the movement of our mood, whether we know it or not, it's associated with lunar phases. That's why we call people lunatics, because on full moons, certain people get triggered, okay? So it's not out of the ordinary. And remember, what are we looking at when we're looking at charts? We're looking at people's emotions, people's tendencies for greed and fear, and how that informs their buying and selling habits on a free and open market, okay? So it makes sense that something that affects our emotions, something that affects the way we think and act, would also affect our buying and selling habits. So I would first caution you not to thoroughly dismiss this as crazy, because you just think about it. Just because it's not common knowledge, just because you may not understand it thoroughly, doesn't necessarily mean it's out there. Okay, that's number one. Number two, if you do your own research, which you should, and let this live stream, whatever I present here, be an introduction or a base with which you start your research, but you should always do your own research, especially if you're going to decide to use something to buy and sell assets, right? It's your hard-earned money. Maybe it's your hard-earned, it's your parents or your friends or your spouse's hard-earned money. Do your own research. And if you do your own research, you will see that there has been very serious research done on this. It's not just a thing that, people in crypto just came up with, or people in crypto just found out about. It's been a thing. And there are people in universities across the world that have been researching this topic, especially as it relates to the buying and selling of assets on the stock market, okay, on international stock market. So I'm just going to show you very quickly one such research paper. So this paper is one that came up quite a bit in my research, and it's a University of Michigan paper by Kathy Yuan, and it's titled "Are Investors Moonstruck?" Okay, and I don't know if you guys like to read or whatever, or if you have time even, but you could just read the abstract, and that summarizes it. And it's basically saying in the abstract that there is a statistically significant relationship between the magnitude of return of a portfolio in and around a full moon versus a new moon. So there's something here. There's an effect. The effect is not fully explained by this paper or any paper that I've seen, but they are they're pointing out the fact that there is a statistically significant effect. Okay, so you can read more about it on your time, but there's another paper that's more of a review, and this one is by a professor in Poland, and it's the influence of moon phases on rates of return of the following Warsaw Stock Exchange indices. Okay, then it goes on to list a few indices of the Warsaw Stock Exchange, of which I'm not familiar of any. But what's interesting about this paper is in the beginning you have a quick literature review. So I don't know how many of you all have gone on to pursue degrees, higher degrees, but this is common in academia. When you're doing research, typically you look at previous research on a topic and you state the conclusions and the findings of seminal works before you go into what you find, what you're going to add to the research, what you're going to add to the knowledge, the pool of knowledge and understanding of a given topic. So I thought this particular literature review was fascinating. I'm just going to read it really quickly. Dichev and Janes proved that returns during 15 days round new moon dates are about double the returns in the 15 days round full moon dates for nearly all major stock indices of 24 analyzed in the period of 30 years. Okay? In turn, Yuan and Al, so the paper we just looked at, the UMich paper. So in turn, Yuan and Al calculated relationship between lunar phases and stock market returns of 48 countries and found that rates of return were lower during the full moon than in the days around a new moon. Okay? Next, the return difference was around 3 to 5% between new moon and full moon, and was not due to changes in stock market volatility or trading volumes. Brahman and al., based on empirical study on 7 stock markets in the period from January 1999 to December of 2009, failed to reject the null hypothesis in regression analysis. However, in some parts, they confirmed previous research of Yuan and Al. Gao, analyzing the relationship between moon cycle and market returns for two major stock markets of China during the period of 16 years, came to the conclusion that near new moon and full moon, stock markets volatility was higher and stock markets return were lower than during other periods. The outcome of the Gao research was consistent with the earlier research conducted by Crack. Okay? And it goes on and on. Basically, in layman's term, quite simply put, there's a series of research that has independently been done by a variety of academics across the globe, right? Across time, stating that there is a relationship between moon phases and returns in the stock market, in various stock markets. So basically, freely traded markets, which crypto is one, right? So that's interesting. Again, do your own research if you're interested in this, but there is something here, okay? Very, very interesting, compelling. All right, now let's move on. How do I use this, and how can you use this? So if you go into TradingView, right? And I don't know, I have the, I'm a pro in terms of the fact that I do this for a living. I use this to pay my mortgage, my bills, all that stuff. And so I have the full, I don't even know what it's called. I have the full suite of everything that TradingView offers. I'm full tilt membership, max out my membership, whatever it is. So I don't know if this is also available on the free memberships or whatever. You'll have to check. But there is an indicator called moon phases, okay? And you just go into indicators and you type in moon phases, and you'll see this is not a community script, okay? It's not something that like somebody made. Obviously, you have a bunch of community created scripts, because you can write scripts for TradingView and then add them to the register, or you can add them to the pool of available scripts. But this is an official TradingView audited and coded indicator. It's called moon phases. So you click on it and you'll see that the first thing I do, and I would do if I were you, is change the colors. I don't know why they did this, but typically the default is that the bottom here is darker and the top is lighter, which confuses the hell out of me and probably everybody else who looks at this, because upon first glance you would think that the lighter is the full moon and the darker one is the new moon, right? But if the default settings, it's the opposite. So that's the first thing I did, okay? I just want to mention that. So the bottom is indeed the full moon. The top, the darker one, is the new moon, okay? And actually, let me go and put in the default settings. Just do it with you, okay? I'm gonna reset settings right here. There we go. Okay, this is what you're going to see when you first pull up this indicator. As you can see, just like I said, you're going to have, I don't know who made this decision. Doesn't make any sense. The darker one is the full moon, but it's darker because full moons are darker. What? And then the lighter one is supposed to be the new moon, okay? And then you have these hashes, and the blue represents the let me not mess this up. The blue is supposed to represent the moon filling, okay? And then the gray is supposed to represent the moon waning, okay? So I don't need the hash marks. I just don't need them. So what I do is, so basically I'm just going to reconfigure it like as I had it. I'm going to remove the indications for the growing and the waning moon, and then I'm going to flip the colors for the new moon mark. I'm going to make the new moon a bit darker, okay, like something like this, and then I'm going to make the full moon lighter, because full moons are bright, right? And that's all I'm going to do. That's exactly how I have it. Okay, so basically, just you don't have to be freaking, Wyckoff or Ralph Nelson Elliott to tell that there's a relationship here. Okay, looking at our specific market, looking at Bitcoin, our main market mover, we can already see just by looking at this chart that if you were to buy on full moons and sell on new moons, you do pretty well. I mean, look at this. Let's just backtest it real quick. Okay, let me get out my pen. Here we go. Okay, so obviously, I don't have the log on, but it's even more pronounced when you turn the log scale on, and you can see more. How would you say? You can see more definition, more amplitude, more variations. Okay, I mean, just look at this. So remember, the full moon is when you buy. Okay, and let's zoom in as to not confuse ourselves. Let's just start March 2020. That low was correlating, or on that low, the absolute low, it was right next to, it was a few days after a full moon. Had you bought, you would have bought the absolute low. Okay? And then if you sold over here, you would have sold this little move down, but it's still a move down, okay? And I have a theory, and I'm going to tell you my theory as to how to best use these. But in any case, you can see a clear relationship here between the new moon and the full moon, okay? The new moon typically is associated with a periods of downturn. Okay, like this one. This is major. Right there, new moon, boom. Full moon, bam. New moon, boom. Full moon, bam. All right, so this was a particularly good one. Full moon, you bought this move all the way up, but then you had a few new moons, this one, and this one, that would have, gained you some certain things. But as you can see, this is not a standalone indicator. No indicator is. You have to use it in concert with a general understanding of price action, and then it's powerful, right? Because you're in an uptrend here. So if you buy this low, what the hell are you doing selling here or selling here or selling here, right? Maybe selling here, you're taking a little bit of profit, but still, these in an uptrend, it's best to just use the full moon as an indication, the full moon as an opportunity to add to your position, right? And then finally, if you sold at this new moon, but see, how do you know the difference between this full moon and this full moon? This full moon is associated with a slight, ever so slight downtrend, but this new moon is associated with the slight downtrend. This new moon is associated with a massive downtrend that's actually hasn't stopped until now, right? So like, there are new moons and there are new moons. Like, this is the mother of new moons. If you knew about that and you sold the top and didn't touch anything until maybe, now obviously you want to start accumulating perhaps, then, that would have been a good call. But then had you sold here, and bought back here, I mean, you're just in that case, dollar cost averaging. So all I mean to say is this. This is a powerful strategy, potentially powerful strategy. There's a lot here. There's definitely a relationship. We can see it with our own eyes. We don't need to, conduct a double-blind study or, read a bunch of research on it. You can, but, I mean, it's clear, right? The thing is, you do need to use it in concert, as I said, with another strategy, with the basic understanding of price action. And I think the best way to use it is to know on a smaller time frame, because this is a daily, right? But if you drop down to like the 4 hourly, for instance, you can know that around, in and around, remember, it's not necessarily the day of, but in and around full moons are good buying opportunities, okay? This was the last full moon right here, okay? And that represented a decent buying opportunity. However, after that, you got a big downtrend, but then it was followed by a rally up, okay? And we're still kind of in that level of this rally up, okay? Now, it's 14 days each. They're separated. The full moons and the new moons are separated by 14 days, okay? Approximately. So this is like, for instance, 16th of May, and this is the 30th of May, okay? This is the 14th of June, and we should be getting a new moon now on the 28th of June. Do you see? And so once we get that, typically, remember, the new moon signifies the top of a move. Typically, it's the top of a move, as you can see here. Right here is the top of the move. Guys, if you're getting value, please like, share, and subscribe. Right? I don't hide anything from you all, and I don't go out of my way to find stuff to talk about. The markets are interesting. Crypto is there's never a dull moment. So this signifies the top of a move, the top of a move, the top of a move. Do you see the pattern? And again, it's not necessarily the day of, but in and around that. So after having studied this strategy, when we're approaching a new moon, I'm looking for the top of a move. So as a result, to apply this, I wouldn't be surprised, given my understanding of the price action. I'm going to go into that in a second, right? This looks like a flat correction to me, right? And I'm seeing 1, 2, 3, 4. Okay, I'd have to zoom in, but here, let me just zoom in. I'm seeing 5 waves here. I see 5 waves here, okay? And if I see 5 waves, I see the completion of something, okay? Because, I study Elliott wave, and 5 waves means the completion of something. This, to me, looks like a flat correction, okay? My original postulate on this entire move was we're in a zigzag. So 5 waves up, okay? 3 waves in the middle, 5 waves up. And as I said this morning, I expect the 5 waves to come up to 25.6 for a variety of reasons. I'm not going to go over that right now. So I do expect, given my understanding of this indicator, this moon phases indicator, I wouldn't be surprised if we made a quick move up here and it took maybe, however long it takes. Let's see. Let's do a time analysis really quickly. Okay, let's do this like this. So time's just another time's just another dimension, or it's just another, just like price, time's a thing, right? And it can be measured, and there are relationships between time. And so that's the cool thing about Fibonacci and waves and time, okay? So the time it took for this A wave to form, okay? Let's say the B wave ends here. Okay, let's say this is the turn. I see 5 waves. I saw 5 waves, so I would not be surprised if this were the end of this B wave. Okay, let's say it is the end. Let's say it took, and let me add a few things to this right here. I'm going to add the 1. Okay, I already have the 1. I just can't see it. All right, so the 1 is this green thing right here. I should probably make it another color. That's why I couldn't see it. Let's do this. Let's go back and change this really quickly. What color should I make it? Let's make it yellow. Okay. Right. So now I can distinguish it between the 618. Okay, so let's just say it took the same amount of time for this A as this C, because typically you can expect the A waves to be proportional in amplitude to the C wave, okay, in a zigzag, right? You see 5, 3, 5. Zigzags typically A and C are similar. They're similar in length. They're similar in amplitude, okay? And because they're similar in length and in amplitude, they also tend to be they tend to be similar in time as well, okay? So I'm going to assume similarity in time and in amplitude. So that's going to take me to July 1st, okay? Let's just say that that is the case, okay? If this is indeed the end of B, and it took exactly the same amount of time for C as it did A, then I could expect C to reach the top on the 1st of July, okay? The 1st of July is not that far off from today, okay? That's in what? I don't even know. It's the 28th. How many days are in this month? How many days are in this month? Sorry, let me just check my calendar real quick. 29 days, okay? So the first is in 2 days. So again, in and around the day of the new moon, we can expect this move to top. Does that make sense? So I would not be surprised if price did something like this and then we got our new moon and that represented the top of this move. Do you guys see how you can use this? It's not 100%. Nothing's 100%. And don't fool yourself into thinking there's any 100% indicator or 100% method or whatever. You just want to make an educated guess, and the better you are at, reading price action, using indicators, finding confluence, like your guess is that much more educated. All right, so that's basically how I would use this phases of the moon thing specifically for the price of Bitcoin and to project the coming moves. Another thing I'll say is this, and let me just pause and see if there are any questions and to see who's in the chat, if anyone. And guys, don't forget to, guys, girls, ladies, gents, don't forget to like, share, subscribe if you're getting value. Okay, no questions, cool. So the other thing I'll say is, I don't think that this is unique or just relegated to something that you can use for Bitcoin, okay? Because all these other assets are openly traded, they're traded on the free market, they should also reflect the similar natural phenomena, okay? And these are just natural phenomena. So let's just say this is a full moon, right? Look at that. At the bottom of this move, you bought this. You proceed to get, from this full moon bottom to this top. You add a 50%. Let's just measure it from today. You're up 32%. And let's just say you don't sell until you reach that full moon or in or around that full moon. I do anticipate we get another leg up, right, in the next couple days. So this may represent a massive move, right? If you bought the full moon and, then you look to take profit on the new moon, okay? So that's just interesting. I don't think that you can only say, oh, it's only works for Bitcoin, because some people out there say that, but look at the charts. Once again, look at this. Full moon, right? Obviously, you didn't go up too high, but new moon, come down, right? There's something there, right? Especially for people who are into Gann analysis, Elliott wave theory, right? Wyckoff. It's this. The bedrock or the foundation of all of these systems of analysis are natural phenomena. So why do we continually find relations with the 618 Fibonacci or the 1618 or the 382, the 236, the point 0.5, all of those relationships are based off of natural occurrences. Okay, they're mathematical occurrences that we see throughout nature. This is nothing different. Okay, if you look at it through that lens, this shouldn't be so strange. All right, but again, it's not limited to Bitcoin. You can use this for any openly traded asset. I believe, right? New moon, pump. New moon, pump. New moon, pump. Right? New moon, not much. It's kind of sideways. But then full moon, dump. Right? It's pretty solid. It's pretty solid. Okay? So let us talk about, I'm just going to go back and see if there are any questions, and then we're going to talk about what's happened since this morning's analysis. Okay, there are a few things that have changed that I would like to address because, more information, more data, I update my reads, right? It's not about just knowing the future. It's just about reading and reacting. Oh, okay, I saw that. I didn't have this morning, right? So I had a 3-wave move, and I was like, I don't know what it is. It's probably that this is wave 1 and this is a wave 2. This can no longer be a wave 2 because it's retraced way past what a wave 2 should retrace. Okay, so for me, this all is a contiguous move. Now that we've gotten that price action, that's what I'm seeing, right? It's kind of like looking at a puzzle and getting more of the pieces, and as a result of getting more of the pieces, you're able to get a better understanding as to what you're putting together. Okay, that's basically it. Anybody who thinks that we're supposed to know the future or we're supposed to see it all immediately doesn't understand how this works. Doesn't work that way. All right. Any questions so far? Any comments? Do you guys use moon phases? If you have, what's your what is your experience with using this indicator or using this system of analysis? If not, let me go on to address the changes I see in the market since this morning. All right. And guys, don't forget, guys, gals, ladies, gents, don't forget to like the stream on your way in, like the stream on your way out. Okay? And subscribe if you're not already subscribed. All right, so let's start with Bitcoin. And as I said with Bitcoin, right? We've clearly printed 5 waves here. Okay? I think that's clear. And that would represent the end of this trend. Okay, because you see 5 waves, you see the end of a trend. All right. So I would expect a move up, but first, you do need to put in a pivot, a reversal pattern. But I don't know how long that's going to last. Typically, in my experience, in these zigzags, the reversal pattern is very quick. I remember last time I was trading this, and I read it correctly, and I was trading it correctly, and I missed the entry on the C leg because I was caught unawares because it happened. The reversal pattern happened so quickly, and I think, let me try and find it. I remember it. I love experience. There's nothing like experience. I can feel and remember the feelings of, oh shit, I missed my entry for that long, right? And I knew, and I read it properly and everything. It's just I missed my entry because I was expecting for us to consolidate longer before taking off. And I'm going to show you where that was. That was here. That was here. Right here. I remember this, and I said zigzags. I saw zigzags throughout the market. Okay, and I saw this, and I was like, ooh, 5 waves in correction. The only way you get 5 waves in correction is in a zigzag. So I was anticipating a 3-wave move. I was short here, got my short in, and I was like, okay, great. And we usually know that these zigzags, the 3 waves down, take you to between 0.5 and the 618 of the A wave, okay? So I was measuring it. I was doing great. And look, here. Sorry, one damn magnet. Let's see. Let's try this again. Okay. So, yeah. We had come down. We kind of kissed the 0.5, right? We were in that region. I was ready to go. But then the consolidation happened much faster than I thought. We just bounced and started going, right? It's actually, I don't know, the consolidation didn't happen because I think I was reading this on the 4-hourly chart. I was doing my analysis on the 4-hourly chart, and the consolidation pretty much didn't happen on this time frame. It was in lower time frames, so I didn't even notice it. And as soon as before I knew it, we were already off to the races, and I'd missed the entry. And I don't know, according to my rules at the time, I didn't want to get in because it was too risky, right? Given that I had missed the entry, I didn't want to take on the risk of getting in a long past that point. I didn't know how far it was going to go. And then when it was all said and done, I measured it, and this is beautiful because we're going to probably see something similar. So if you measure this right here, from the beginning of this A wave to the end, which I believe is here. Let me turn the magnet back on. And then the retracement of the 3 waves. You see, look at how high the C wave went. Let me turn off the log scale. Look at how high the C wave went between the 1236 and the 1618. Okay? And the end of the 5th wave of this C wave, or I think it's right here. So right beyond the 1236, beyond or just shy of the 1618. Okay, and that's exactly where I have my. So part of my reads are also based on my experience, right? So that was the last zigzag that I traded in Bitcoin. At the time I was trading Bitcoin, I remember very clearly. I was only trading Bitcoin on leverage. That was like my thing. And here, similarly, and it's not because I know it's going to come between the 1236 and 1618, and I explained it this morning using three main reasons, and I can go over that really quickly, but I have a feeling we're going to find the end of this next move up at 25.6. And the 3 reasons, one being that, yes, in my experience, the zigzags that I've seen, that I've traded in Bitcoin have come between the 1236 and the 1618. I remember studying that. I remember making a mental note of that. I actually made a physical note of it in my trading journal because I was under the impression that my C wave was going to stop at 1236. Okay, and then I was surprised that it had breached the 1236. That's why I remember it very clearly. Second thing is, if you take, and I drew the line this morning, but this is clearly, right? Let me get rid of this. There's a clear trend here, okay? 1, 2, 3, 4, 5. There's a trend here. Yeah, you want to draw trend lines, there's a trend here. Every time we touch this trend, price rejects. Price rejects once, twice, 3 times, 4 times, right? 5 times. Clear rejections off of this trend line, okay? So, were you to take the price action below that trend line, right? Let's make this solid and superimpose it from the site of breakout. Site of breakout would probably be here-ish, right? You'd get this area more or less, right? You'd get a target, a technical target for your pattern analysis of this area. Okay, so that was my second reason. And my third reason, what was it? What's the third reason I thought? Yes. The third reason I mentioned in this morning's update was that this whole, if you read Robert Prechter and Prechter and Frost's wave theory, okay, the seminal book on Elliott wave, you'll see that there's a part that Prechter discusses, I think it's Prechter, who discusses the targets for an initial break of structure after the break, after a large trend, or after a trend, basically the breaking of a trend, and how the first wave out, so the initial break of structure, targets wave 2 of an elongated or an extended wave. Okay, because typically we all know that the initial break of structure targets wave 4 of the lesser degree of the previous trend, right? But in the case of an extended wave, you target wave 2. Okay, so I actually wouldn't be shocked if we came even a little higher to target that wave 2, which would be closer to the 1618, right? If we take this, boom. Yeah, see, I wouldn't be shocked if we came closer to the 1618, so like 26.4, something like that. And so those are my three reasons. For the low IQ curmudgeons who, the trolls who say, oh man, you haven't been right forever, blah, 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 you're so wrong. Like, if you watch this channel, you listen to this channel, and you actually follow my analysis, what you should gain is a better understanding of analysis, which can lead to you making good calls, good buying and selling calls. But it's just a tool, just like any other tool, okay? Like, if I know my stuff, I'm basically applying proper use of Elliott wave, proper use of technical analysis, and maybe I may make some erroneous conclusions, but what you should really get out of watching other people do technical analysis on YouTube is not necessarily the conclusion of their analysis. It's more how they do their analysis, the method, the process, right? So that you can do the same thing for yourself. And the three reasons I just laid out for why I'm expecting the price to come here are way more valuable to you as a listener, as a watcher, than the actual price prediction. Because I actually personally don't really care about the price prediction. For me, in my system of analysis, in my trading regimen, in my risk management activity, I just care for the big move. I want to know, are we going to go up, down, or sideways, okay? And if we're going to go up, more or less about how much. I don't give a damn if it's 24K or 26K. I'm not even trading Bitcoin, right? So I do have to repeat that sometimes, because there's some people who, they do very little work, they put very little effort into trading, and obviously sentiment is low. We've been dumping for 300 to 400 days. I get it. People are annoyed, okay? And there's a lot of fear and annoyance in the market. But truly, if you want to get better and you want to improve your win rate and you want to make money in trading through analysis, you have to learn. You have to learn. You have to get better learning about whatever you're learning about, whether it's classical technical analysis, Gann theory, Wyckoff, Elliott. These things work. You have people with proof that they do give you an edge, but it's just a tool. It's not the end all be all, and you have to put some work in and really learn how to use it and then apply it in with something that makes sense for you. Okay? So, yes, I've been calling for a reversal since, if you're subscribed to the channel, you'll know exactly. I've been calling for a price reversal since we were in the mid 30s. I was buying over here, okay? I started buying over here, and with no regret, because and I just look at this because I critique myself. I'm my biggest critic, so trust me. I was looking at this chart and I was like, it's unlikely that we come any lower, and I probably, having gone back in time, would have made the same calls, because it's exceedingly rare to get an ending diagonal in a wave C. Okay, if you really zoom out, you see, and this is not just like defending myself. This is, again, just I use this as a learning experience, because what am I going to do next time given the same price action, given the same opportunities? Like, how am I going to react? That's what I think about, right? It's not about, oh man, I messed up, I'm an idiot, or whatever. No, I try to learn from my own mistakes, from what I did right, what I did wrong, right? But again, if I'm looking at this, I'm thinking flat correction, okay? I am thinking flat corrections. I don't think that's that controversial, okay? And as in terms of thinking flat correction, I'm thinking, okay, if we've come down with this funky price action, especially this wick right here, okay, I feel like that is not consistent with a regular 53535 wave, ending wave, that I'm used to and that I expect at the end of a flat correction. So as a result, I relegated this to being a B wave, okay? And the B wave, basically, of this, A, B of B. So I was waiting for C of B, okay, before a pivot and then a dump, okay? This is why I was buying here, because I was not, I won't log, I was not under the impression that we would continue to go down as an impulse, but we did. And then I was proven wrong, and it's rare that you get an ending diagonal. By ending diagonal, I mean a 3-3-3-3-3, right? In a wave C. You typically see those in wave 5, like here, okay? You don't see them as much in wave C. Okay, I didn't even know that at the time, but it was just based on my experience, based on what I had seen from charting, and I'd been charting daily for, a year and a half, 2 years, okay, by that point. And so I was like, nah, I don't see it. I think this is clearly 1, 2, 3 waves, okay? And for me, it was so crystal clear. And so this, to me, was a reversal pattern. I was buying the bottom of this reversal pattern in my head for a move up, and then I was going to sell once we got to the top of this range for the move back down, okay? That still seems to me very, very like a safe, logical read, okay? Hard to know that you're going to get this. And, for people that caught this, they may have other reasons why they caught it. But in my system of analysis, in my system of trading, this is exceedingly rare. This is tough to catch, but I'm working on ways. I think if this happened again, I would obviously be looking for the ending diagonal, because I've seen it more often than not. And, the manuals that we read for training, they're usually using stocks as a background for telling you if something's rare or something is commonplace. But I've seen more ending diagonals in waves C in crypto than not. So I would no longer say that it's exceedingly rare. I would just say it's less common than a regular 5-3-5-3-5 impulse. Okay. But what really invalidated the whole idea of this being a wave B is the fact that we've come down so low, right? And if you zoom out, obviously you'll see that this what would you call it, expanded flat has come down and fulfilled the levels of retracement that you would need for this previous uptrend to fulfill this wave two correction. Okay, it's a sharp correction, and that's what you're expecting in a wave two, right? And I said this morning, right? Why do you typically get 5 waves up and then a sharp correction down for 2 and then 3 and then a shallow correction for 4 and then 5? Why do you get that type? Usually you get that type of advance in your impulses. It's because wave 1, very few people know that the new trend has started. Okay, they see the price rise, they think the old trend is still in play. If we're going up, the old trend is down. Okay, and so once they get up here, they're selling into strength. They're thinking, I'm going to take profit because I don't want to be, caught down there again, because this is a downtrend. This is why you typically see a sharp wave 2, okay? And this, although it's a flat correction, is a sharp wave 2 by virtue of the fact that we've dipped so much. It's not shallow. A shallow correction would be more flat like this, right? This would be considered a sharp, even though it's not a zigzag. It's a flat. It's a 3-3-5. This is 3 waves. This is 3 waves. There are 5 waves here as I count them. So yeah, that's just, I don't know. Maybe it helps people if you're studying, if you're trying to gain knowledge and experience. Like, those are my mistakes. That was my thought process. Hopefully that helps you in your journey. But everybody has to make their own journey. So, the people complaining, they're just either too lazy and they want answers, or they just don't understand how any of this works. There's no way, there's no universe in which you just follow somebody's calls and you're profitable. Not in the aggregate, not in the long run, okay? At some point you're going to get burned if you don't know what you're doing. All right, let's just go through the other assets given what the price action we've gotten since this morning, and then we'll call it a stream. I'm just going to look and see if there are any questions or comments. Definitely like the stream, share, and subscribe if you're not already subscribed. All right, no questions. All right, let's go down. Dodo. Okay, I'm still reading. So let me jump down into the 4-hourly time frame. Okay, based off of what we saw this morning, or since this morning, my analysis for Dodo is unchanged. Okay, I'm seeing 5 waves here, and I'm seeing 3 waves here. Maybe I would say 3 waves like this. But all in all, the 618 retracement level has been maintained by these 3 waves. So if this is impulsive, right? This is a 5 wave move. This is a 3 wave move. This is quite sharp because we're coming down all the way 618 of this move. So I would say this is either a wave 1 and wave 2, or this can be a wave A and this can be a wave B for a wave C. And I don't think it's a wave A and a wave B, only because if we zoom out, let's go back to the daily. If we zoom out, you'll see we've put in 40 days of consolidation, what I call reversal consolidation, what Ralph Nelson Elliott calls an AB base. So for me, this was my big A, Let's see. Okay, you know what? I can look at it like this. This was my big A. This was my big B. This was my A wave, my B wave. So yes, oh sorry, small a. If you don't know what I'm talking about, I'm talking about a reversal pattern and the components that comprise a reversal pattern. And I can see this as being a legitimate labeling of a reversal pattern. I'm just going to do that more carefully. I don't ever see anybody talk about this, and nobody talks about this to the extent that Ralph Richard Prechter, Robert Prechter rather, says that Ralph Nelson Elliott's whole theory on A-B base is erroneous. It's something he made up. And if you don't know what I'm talking about, pick up. If you're really serious about Elliott wave analysis, you have to read the wave theory. It is very well written. It is the best compilation, in my estimation, of all that we know on Elliott wave. Okay, it's not perfect. There are mistakes, and he does acknowledge the fact that he's still doing research. He's still trying to understand certain things. And yes, we're in crypto, and Robert Prechter and Bob Prechter and Robert Frost, or whatever, Richard Frost, I don't know what Frost's first name is, they acknowledge that most of their understanding is from a background in stocks. So crypto is new, right? We don't close on the weekends or after hours, and we're always trading. And so I think if you're trading crypto, you're seeing so much more, and you're seeing maybe certain things that are different. Nevertheless, in it, he says that the AB base, Ralph Nelson Elliott's AB base, is made up, and it's one of the few mistakes that Elliott made. Okay, he's saying Elliott, the guy who has his name behind the theory he claims to practice, was wrong, and that's fine. I respect Prechter because he gives his reasons for it, and he's thorough. He's very thorough. But I, in my own research, Azim Fasasi, before I even knew about a thing called the AB base, and if you read Ralph Nelson Elliott's Nature's Law, it's his treatise called Nature's Law. He has one small paragraph dedicated to AB base, and he basically says this: every single time price reverses, before doing so, it puts in this pattern that I'm going to call AB base, and it looks like an A wave and a B wave before it goes into impulse. Okay? Before I even knew about the AB base, and if you're subscribed to the channel, you'll know this. I just recently started talking about the AB base, and I had read Nature's Law, but I never saw this small paragraph. I was saying that I've noticed that on every single time frame, daily, 4-hourly, hourly, minute, that any time price is changing direction, it doesn't just go. It puts in a variation of this set of reversal waves, a series of corrective waves that altogether make a reversal, okay? And it's an A wave, okay? Usually a flat correction, right? But it can be a zigzag. A B wave, usually a flat correction, can be a zigzag, can't be a triangle, but usually a flat correction. And then another A wave that's small, okay? And then another B wave, and then finally it goes into impulse. I've said that forever, and I only mention that not to toot my own horn, but when I'm looking at Dodo, looking at that, given that, right, I can see this being these 5 waves, right, being your small a, and these 3 waves being small b. I can see that. It's not out of the realm of possibility. So I say that to say this. This may very well be a corrective sequence still, and so, but I do see it holding the 618. If it holds the 618, then we're dealing with a zigzag. So I'm expecting 5 waves. Let's see. If we got 5 waves here, 3 waves down, then I'm expecting 5 waves up in this region here. Okay, and that would make sense because if you look, this is where there's some resistance. Whoops. There's some resistance here, right? Clearly. Look at all this wicking. There's some resistance here. So I can anticipate if we're coming up to these levels, we find some resistance between around 20 to 21 cents. That's where I would anticipate the price stop. Okay? So that's just dodo. I would not be shocked if we were still in correction. Okay? Litecoin. Again, because a lot of altcoins put in their reversal patterns, right? And I'm seeing big A and big B, right? Big B usually retraces, in my experience, big B usually retraces the origin of big A, except when big A is the A wave or the base of a zigzag. Okay, and we have a couple such cases, but typically if A is a flat correction, expect B to make a new lower low. This would be called, in Elliott wave theory, your orthodox low, and this would be called the technical low. Okay, but it's still the same pattern. It's just basically like the Wyckoff people call it. You're creating a spring. Okay, it's basically you're testing the resolve of the sellers in the market. If there are no more sellers, because you push the price below the previous low to just exhaust all the sellers and test and see if any sellers remain. And once you're sure that no sellers remain, then you mark up the price. Okay, that's how Wyckoff would explain it. But that's what I see typically with these A, B waves in these reversal patterns. And then, if that's true, okay, I'm having trouble, and I've been looking at this all morning. I don't know what to make of what Litecoin's doing. I don't really know. Okay, and let me tell you exactly what confuses me. So I know we're in the reversal stage, and I know that we're at the end of the reversal pattern, okay? And I look at this right here, and I can say that this is an A wave, this is a B wave, this is my big A, or small a, small b, and then my impulse starts here. That's exactly what I've been saying and what I thought, okay? But it's also possible that this is your A wave, okay? And then this is a B wave of some sort. In which case you would again be dealing with a zigzag, right? I confuse myself even saying that. Because then what do you make of this base right here? What do you make of that? Anybody know what Litecoin's doing? I'm just going to jump into the comments. I need a second to gather my thoughts. Litecoin's been confusing me for a bit. Because remember, I said it this morning, it was a 1-2-1-2 maybe, right? And by 1-2-1-2, I mean wave 1 of... So I took this all here to be wave 1 of an impulse, right? Because if this is small a, this is small b, then your impulse starts here, right? That's your impulsive price action. It's clearly impulsive, but no volume. No volume. So I don't like that. And I have to be very honest with myself in saying that doesn't make sense. So just using my volume indicator, it's likely that this is small a, okay? And what comes after that is small b. But small b typically retraces to between 786 and 914 of small a if it's a flat correction, okay? And that would mean we have a ways to go to the downside, because the 786 and 914 of this A wave is all the way down here. So I don't know how likely that is, okay? So that's like one scenario for Litecoin, okay? The other scenario is you're dealing with another zigzag, okay? So this 5-wave move here, and you're looking for a 0.5, 3 waves that retrace between the 0.5 and the 618 maybe, if not the 382, just a shallow retrace, but you're looking for a zigzag. So I take my Fibonacci retracement tool of this, and I'm looking at this, all of this. This is what confuses me. What do I make of all of this price action? Okay, I see 1, 2, 3 waves here. Okay, I see 1, 2, 3 waves here. So for me, this looks like an A wave, a B wave, and then this is straight down. This is an impulse. That's a flat correction, right? The issue I have with this is the following. Let's turn log off. We don't need log on. The issue I have with this move is the following. If that's true, then how do you explain, whoops, you're pushing it, okay? It's possible, and I'll tell you why it's possible. And it's probably, even though this makes it improbable, it's probably the most likely scenario. Your B wave extends to the absolute limit, the 1618, the phi ratio of this A wave, okay? If this is a flat correction, your B wave is really extended. This is what you would call a super, this is not a technical term, but I'm just saying this would be a super expanded flat. An expanded flat where the B wave breaks the plane of the A wave, okay? And then you would also be getting something that you don't see every day, which is a running flat, okay? But good news is these two things go hand in hand. The expanded flat and the running flat go hand in hand. You don't have a running flat without an expanded B wave. And that's the whole purpose. It's kind of like a regular B wave flipped or skewed. Okay, let's just actually do that here. Guys, if you're getting value, please like, share, and subscribe. Like, I love sharing the analysis. Obviously, we're in crypto. We love making money. We love when the price goes up or the price goes down if you're short, whatever. But I do have a legitimate passion for analysis and putting together the puzzle pieces and making sense of price action. That's fun for me. Like, aside from the economic speculation, I kind of love trying to figure this stuff out. And if you haven't noticed, this is why sometimes I go into... I'm not as concerned, are we going up or are we going down? I want to know what the hell is going on, right? So this is what I'm trying to figure out. Anyway, so a regular flat correction would be something like this, okay? A regular flat correction is actually expanded by just looking at the data. Those flat corrections have this expanded B wave. But when you're really expanded, and remember, the limit or the upper limit of the expansion is the 1618, right? Because B waves can retrace as shallow as the 0.5 and as deep as the 1618 of your A wave. So this would be the A wave. You see it really hit the limit. If this is indeed a contiguous flat correction, it's hit the limit of the B wave expansion. In that case, this B wave pulls up a lot and forces this wave C up. And that is what gives you what we call a running flat correction, and those are exceedingly rare. You don't see them that often in the wild. This basically means the asset is super bullish. Okay, that's what it means fundamentally. It's basically like, okay, you're correcting, and while you're correcting, people are buying. They know they're correcting, but they don't give a damn. They're not waiting to buy in for the correction to finish. Even smart money, everybody's buying, even in the B wave, and as a result, your C wave impulse is front run because there are too many buyers for the wave C to come and meet the origin of wave A or even exceed it slightly. It's front run. That's what you call a running flat. Okay, it's for really bullish price action, really bullish assets. So that's a good sign if you're long Litecoin right now. Okay, but that's, although it's a rare thing, and I tend not to say, oh, this is exceedingly rare. That's must be what's happened. When I'm making reads on the charts, I'll have a series of options, and I'll try and pick the most probable one. And usually the most probable one is the most normal, the less exceptional one, right? But in this case, given all of the options, I think this is the most probable and the most likely, just given the information we have now, okay? So, yeah, I think this is a zigzag. Okay, I think this is a zigzag, and you have your A wave being here, and I think this is your B wave, and you've gotten a running flat in your B wave, so I'm expecting wave C to come up here, okay? And what else? What else? Okay, I think what we can do is we can anticipate based off of the size of wave A, we can project wave C. Okay. Again, 1, 2, 3, 6, 1, 6, 1, 8. Wouldn't be surprised if we ended there. Seems like a lot of price action in this area, so this is likely. Let me just delete this. So again, zigzags, I'm not surprised if they come between the 1, 2, 3, 6 and 1, 6, 1, 8, or even meet the 1, 6, 1, 8. Okay, so I'm just guesstimating. I wouldn't be surprised to see a $72 or $74 Litecoin in the near future. And then if you did a time analysis, right, saying that wave C is going to take just as long, if not a touch longer than wave B, let's assume wave B ends in the next, 4 hours. We can anticipate for our wave C to end tomorrow at 4 p.m. DC time, or maybe at the 1618, just at 8 a.m. on the following day, right? Again, it's not witchcraft, it's not anything. Time is another aspect, just like price, just like we do price projections, you can do time projections based off of math, based off of probabilities, based off of patterning, okay? And it's actually helpful. It's not just, for clicks or anything like that. It's helpful because one of the guidelines in Elliott Wave is the guideline of proportionality, right? Or you can call it a principle of proportionality, where it's not a hard and fast rule, but typically waves of the same degree tend to be proportional in price and time. So if you got a big wave, right, that took 3 days, and then you had a correction that took just 1 hour, it's likely that that is not the end of the correction, because you're likely to get some sort of correction that takes you around 3 days, or not, 1.618 times 3 days, or twice as long as 3 days, 6 days, right? Something like that. Proportion, time and proportion, time and price. So again, if you got a correction like this after 3 days, it's unlikely, because this is disproportionate with this rise, right? It's possible maybe in an extended wave, but it's unlikely. Okay, so that's just one of the other clues we use in Elliott wave to give us an idea as to what's going on and what may be probable in terms of price action. Yeah, so that's my best read on Litecoin. That's what I'm most comfortable with right now, given the most recent price action. Okay, I know this morning I was saying I think it's a 1 2 1 2, but it can no longer be 1 2 1 2. Why? That's thrown out the window for me in terms of probability, because if this were a wave of a lesser degree in this purported third wave, I couldn't explain it reasonably, given that the retracement of this wave came down all the way to 786. And as I understand it, wave 2 cannot breach the 618. It cannot, significantly breach the 618 and still be a wave 2. The only instance that is allowable is in the case of a diagonal. Okay? So that's how I see it. I'm going to look and see if there are any questions, comments, whatever. Guys, don't forget, if you're getting value, please like, share, and subscribe. All right, let's move on. Reserve rights. And also, if you have any requests for any assets that I'm not looking at, that aren't in my watch list, that I'm not invested in, because everything on my watch list I'm either invested in or looking to invest in. I'm pretty much invested. I've got positions down the line except for EOS. I'm looking at EOS just out of curiosity, but I've got positions in everything here, except Bitcoin also, obviously. I'm just also looking at Bitcoin because it's our market leader. All right, so let's keep going. Reserve rights. Given everything that we've said to this point, I do believe that the market does have a rhythm. And the rhythm thus far has been that we've been putting in corrective waves, and we've been putting in zigzags. Okay? But in this case, I think it still may hold. I think that there is, the market rhymes. It doesn't repeat, but it rhymes. Here, you have a big A wave, right? That's your initial break of structure. And look where it targeted. Look at this. Bob Prechter would be so psyched about this. This is an extended wave, right? And this is the beauty about theory. Good theory, you can see it as soon as you start charting, as soon as you start doing your analysis. That's how you know. Don't forget these things, because you learn about it and then you go to work, you chart and you trade and you see it, and it reinforces the guidelines, reinforces the rules. It becomes your lived experience. Okay, what did I say before? I said in a typical break of structure, initial break of structure, your A wave targets wave 4 of the previous trend, right? Of the, wave 4 of the lesser degree of the previous trend, which would be here. Okay, if this is the lesser degree, then you're looking at this 5 wave structure. This is wave 4 of that, this is wave 4 of that 5 wave structure. You would be looking for your wave A to target that, and then consolidate, give you wave B, a pivot, and then finally you're off to the races. However, we did see this in Bitcoin, and this is another thing that gives us, although Bitcoin hasn't printed its initial break of structure yet completely, This is another reason that sort of it corroborates our hypothesis on Bitcoin's ending diagonal, or 33333, that had an expanded fifth wave. Okay? Because we continually see other assets mirroring that same behavior with expanded fifth waves, with an A wave initial break of structure targeting wave 2 of the expansion, which we know, according to the research done by Bob Prechter and Frost, that wave 2 is the target of your initial break of structure when you're starting to change trend, if that wave, the preceding wave, was expanded. So, I mean, I don't know. I think that's awesome. I get excited when I see that, because it's just confirmation that this theory is not just some academic exercise, something that you do to disagree with people on the internet about, but it's something that you can actually see, patterns that you can actually use and apply practically to read the market and get a serious edge and make quite a bit of money in the market, right? So we have this big wave A, targeted wave 2 of the previous trend, right? And let's zoom in a bit. And then after that, obviously, we get a wave B, and I think this is my wave B, okay? And this is, I have 5 waves, but again, I don't have volume. So I have to go back on what I said, and, I said that this was an impulse, and it was clearly an impulse, and it is an impulse, but it's still corrective, because I do not have the volume indicating that it's anything but corrective. If it were impulsive, like purely impulsive, I would see much higher volume, I think, okay? And the other thing is, if this is big A and this is big B, then I'm expecting a small a here and a small b here. And what is the theme? What have we been seeing throughout the market? We've been seeing one thing. We've been seeing zigzags. So I won't be surprised if this is indeed similar, where we have 5 waves up, 3 waves down, okay? And then we're expecting finally our impulse out of this, the beginning of this zigzag, okay? And this is a legitimate zigzag, because if you take your Fibonacci retracement tool and you measure from the bottom of this this 5-wave structure to the top, you will see that this consolidation that we've been in since the 20th of June, so what, 8 days now? It's been holding the 0.5 Fibonacci, right? Basically the 0.5 to the 618. It's been holding the golden mean. So you can see 3 waves here, or a variation thereof, and in this case, I'm seeing a complex correction, okay? I'm seeing a 333 complex correction, a WXYXZ, and this I see as a reversal consolidation, or AB base, whatever you want to call it, okay? So I'm seeing the same thing throughout, and when I do see a common theme throughout the market, in my experience, those reads have been more than accurate. Just like last time I showed you in that wave 4 correction, when I was reading Bitcoin and saying, oh, we have a zigzag here, and I saw zigzags throughout the market, and that's exactly what we got. When I tend to see the same story throughout the market in different assets, it's typically accurate, right? I think that's just another way of seeing confluence in your reads. Here we go with Cardano. Okay, and I'm gonna just briefly check any ideas, any questions, comments. Does anybody want me to look at any other assets? All right, let's go on with Cardano. And guys, if you're getting value, please like, share, and subscribe. So Cardano seems to have put in its big A right here. Okay, three-wave structure, wave 4 of the previous trend, right here. Big A, big B, and in Cardano you did not have an extended wave 5. Do you see? So it made sense to target wave 4 of the previous trend. So big A, big B. All right, I think big A and big B are clear. Now you're looking at small a, right, small a, and I don't know, but it's possible that you have another running flat for small b. Okay, do you see that? I don't know, but this is likely. You're getting a running flat. And fundamentally, just think about it. Where else would it be appropriate to have a running flat? Meaning, where else would it be appropriate to show extreme bullishness, extreme accumulation of buy orders over sell orders? It's at a bottom, right? It's like that's when you would be the most bullish because you have all of this buy pressure that's building up and building up and building up. People, dollar cost averaging on the way down, buying on the way down, waiting for that reversal. So the price is extremely bullish. So you have small a, I think this is clear, 3 waves, right? Again, against wave 4 of the previous trend. So I think that is clear for small a. And what comes after, I see as 1, 2, 3. I see a zigzag here. So I see this is small a of the B. I see this is clear 3 waves. Okay. So small b of B. I'm just going to put a circle around it. Whoops. I'm going to put a circle around this just to keep the degrees. So this is small a, this is circled small a, circled small b, and this would be circled small c, right? But this is all, oh, sorry, this would be circled small c, okay? So the trick is to figure out when circled small c is finished, because in our reversal pattern, remember, it goes A wave, B wave, small a, small b, and then impulse, okay? So you have those 4 components. And again, you don't know exactly how it's going to look because a correction can be, other than the first initial wave, right, which I've only seen flats and zigzags, any other part can be either a flat correction, a zigzag, or a triangle. So, you can have permutations and combinations of all of the above. So I'm looking for small c here and waiting for small c based on my read, waiting for small c to finish. So, how do we identify the ends of trends? You look for 5 waves. And if it's a downtrend, you look for 5 waves down. And here I am seeing 5 waves down. And who else is seeing this? Let's just count it out real quick. I'm seeing 1, 2, 3, 4, 5. And what's interesting is, okay, this is clearly a diagonal. Okay, that's the first thing, because wave 4 encroaches on the position of wave 2, and you only see that in diagonals. That's the first thing. The second thing is, I like this count because wave 2 is relatively simple, and wave 4 is relatively complex. Right? And by the guideline of alternation, this is what you should be expecting, right? Simple correction, complex correction. It's more composed, right? So those 2 things, I like this count. And symmetrically, it has the right look. I don't know. Let me put the, right? It looks the part, right? It looks like some sort of, there is symmetrical, or there is some sort of geometric it's aesthetically pleasing. I don't know how else to put it, but Prector just calls it the right look. It has the right look. It looks regular. It looks like, it could be. And you tend to see ending diagonals and see when you have a running flat, okay? Because you don't have running flats often, nor do you have ending diagonals in wave C often. But just like I told you, crypto, I'm seeing it left and right. So I don't know. I might have to change my views on that. But when you do see it, you also see it in the context of a running flat. So I would say that this is basically the end of this correction, given our analysis is likely to be the end of this correction right here, and this is expanded, right? This is the end of A, and the end of B basically breaks that plane, and it's very bullish, and you have your ending diagonal, and it's coming, and it's basically running. So it's front running the end of this trend. So I don't expect this to come down any further, okay? And so this is the story we're seeing throughout the market. The end of these corrections are printing 5, 3, 5 corrections, right? Zigzags, right? Do you guys see the story, the consistency of this, right? And look, right here, the golden pocket is held. So this is a valid zigzag. It's 5 waves up, 3 waves down, expect 5 waves up. Now let's do a quick projection in terms of time and price, okay? And guys, if you're getting value, I don't see analysis like this. Maybe there's analysis like this elsewhere. I look at less and less analysis as I become more experienced. I just don't have the time. I'm spending most of the time just poring over charts on my own. And the depth of analysis that I require at this point to learn, other analysts aren't really providing, right? I'm getting more fundamental analysis about, the Fed and, what Powell is doing and what they hope will happen and all that stuff, as opposed to actual wave counts and guidelines and rules and application of such on price action. Anyway, if we projected, let's just do this real quick. And again, time projections are not some sort of, parlor trick. Just as price projections aren't, right? It's just another asset. Time and price are almost equally, I would say, as what's the word I'm looking for? They're equally as speculative, right? And they are both important. They're both important, if not equally important. It's important to know more or less when something's going to happen. So A wave, retracement of the B wave. Let's just take it all the way down here. Again, between the 0.1236 and the 1618 is where I would expect it to find the end of this. And that would make sense because there seems to be a lot of resistance right here, especially right here at 58 cents, okay? Would not be surprised if we came up to 58 cents. In terms of time, if we could take, now let's superimpose time projection on here. I'm using trend-based time. Trend-based time, it's basically using the A wave, retracement of the B wave. So I'd say the B wave is pretty much up right now. Okay, so let's zoom in. Say if it took just as long as the first wave, you would expect it to end tomorrow. Today's the 28th, or the day after tomorrow, early in the morning. If it took just a little longer, right, which I kind of expect it takes just a little longer, I would say July 1st, okay? And again, that's confluent with our moon phases because remember, we are expecting a new moon very soon, right? Let's turn on the moon phases. You can see bottom of this trend was a great buy, and on the new moon you can expect the top of a move. So I can expect in and around that new moon for us to get the top of this move, okay? But I just, when I am uncomfortable with a read, I'll tell you, and I'll be like, I don't know what's going on. But when I go through my watch list and I see a recurring theme, a pattern, I become more and more convinced that that is a likely read on the markets. I see zigzags, okay? I see zigzags. Okay. Telcoin. And let me just have a quick glance at the messages. If you're getting value, please like, share, and subscribe. Jay Witsy, I don't think so. Because look, so Jay Witsy asks, did the new moon pump already happen? And it's, I'd be careful to call it a new moon pump because it may confuse you. I wouldn't say it's a new moon pump. I think the new moon represents a time at which the price is likely to be at the top of its move. So the pump, actually, if you really want to profit from this understanding, the pump happens close to the full moon. That's when you want to buy low, right? When the new moon comes, you want to get ready to sell or buy more. Not buy more, sell, take profit. And then in the course of the new moon becoming the full moon again, that's when you want to reaccumulate. This is what the research shows. This is what the charts are showing. Right? Not financial advice, but this is just what the research is showing. So yeah, again, bottom of a trend, full moon. And here you kind of got a move up, and then you got this move down, but still, this is our big A. Once again, our reversal pattern of 40 days, our big A, our big B. Let me just turn off the moon phases because we get that whole thing. And here, I would say you're getting another zigzag. Okay? And this is actually really good that these are not impulsive waves. First, I don't think they're impulsive waves. I know I said they were impulsive waves because I read 5 waves, okay? I see 5 waves in these moves. But they're not impulsive because I don't have volume, and volume is a primary indicator. It's very reliable if you have enough if you have enough market participants. Volume can tell you a great deal. And the volume's telling me that these are not impulsive waves. These are corrective, okay? That's number 1. Number 2, given a major reversal like this, actually, let's just do that. Take me a lot longer to do the opposite. Given a major reversal like this, you would expect for your initial your actual impulsive price action to take you much higher, right? Because remember what this is. You're reversing a 400-day or so downtrend, right? And so you're not going to be putting in these small moves. You're going to be putting in really large moves for quite some time because you're going back into a different market, a bullish market, okay? So I don't think we've gotten into impulsive price action in these assets, at least that we're looking at on this watch list, okay? For those reasons. And again, given the theme of the markets thus far in our analysis, it's likely, more likely than not, that you're seeing a zigzag, okay? You're seeing zigzags, you're seeing running flat corrections, you're seeing all of that stuff. Okay? So you're seeing 5 waves up, and you're seeing 3 waves down, and so you can expect 5 more waves up, okay? But 5 more waves up in impulse. That's the important thing. 5 more waves up in impulse, pure impulse, okay? So one of the interesting things is, for this in particular, let's make this completely opaque, or completely transparent, and let's see the retracement of this, and it looks like, okay, here I could argue based off of this retracement not coming down to the golden pocket, you may be in impulse in Telcoin. You may be. But I don't know. Okay? You may just have a shallow zigzag retracement, which is possible, okay? I would say it's more than likely that this is a zigzag and the retracement is shallow, which is another thing that's bullish, okay? It's another thing that's bullish. If you're getting a 5-wave structure up in a zigzag and your retracement is shallow and it only hits the 382, it doesn't even hit the 0.5, that is very bullish. So you're seeing bullishness across the board, either in zigzags or ending diagonals and running flats, and now shallow wave B retracements of zigzags. These are all bullish factors, okay? Let's see, and this is itself a diagonal, I believe. Let's see if we can't count 5 waves. So let's see, this is A, this is B. We start counting here. 1, 2, 3, 4, 5. I count 5 waves. And this is clearly, unmistakably, an ending diagonal. If, you don't have to study Elliott wave too long to know that right here, because look at how much your wave 4 retraces into the space of wave 2. That only happens in a diagonal, okay? And so, look, you have your aesthetically pleasing, your right look for your diagonal, okay? I think you have a broadening wedge. I think this is a broadening wedge, okay? Something like that, yeah? So you have a descending broadening wedge, okay? So you have your ending diagonal, and now you're getting a reversal pattern, okay? Your big A, your big B, your small a, your small b, boom. Okay, do expect some sort of reversal imminently. Okay, I count 5 waves, and remember, if I count 5 waves, that signifies the end of a trend. Okay, let me check again the comments. Let me check again. Guys, please remember, guys, gals, ladies, gents, please remember to like and share and subscribe. If you're not yet subscribed, like the stream on your way out or on your way in. Okay, now let's look at Kadena. And let's make this transparent. Let's make this transparent. Jeez. There we go. Okay. So I'm just basically showing what I've been showing. If you go on larger time frames, you see a big A. You know, you're clearly in a reversal pattern on the large time frame. This is wave 4 of the previous trend. Your big A targeted wave 4 of that previous trend. Okay, so that's your big A. This is clearly your big B. Okay, and you have your, now you're going to zoom in on the pivot. You're looking for small a, small b. And in Kadena, if you're subscribed to the channel, you already know that we've been holding we have to go on log to faithfully represent this. You've been holding the 618 of this previous uptrend, which shows strong continuation for a a resumption of this impulse, right? See that? You've been holding the golden pocket of this uptrend, which was massive, right? In the span of 104 days, so about 3 months, Cadena, in a wave 1, okay, mind you, not a wave 3, a wave 1, Cadena did 8,100%. In 100 days, 8,100%. So, in that same time, in approximately that same time, remember, because waves of the same degree tend to be similar in price and time. So we've had a 3-wave correction, which is a zigzag. You have one, let's see. Yeah, 1, 2, 3, right? That's your zigzag. And that took 184 days, 183 days. So it's similar. It's not too much longer, okay? And if you add the reversal pattern, you're now at 227 days. So about twice as long as it took for it to run up. So still proportional, okay? So that's the larger time frame. You zoom in, you see, you just focus on this reversal pattern just like I did, and you clearly see you have your big A, your big B of the reversal pattern, and now focusing in on this pivot, you're looking for a small a and a small b. Your small a is here. Let's go off of the daily into the 4-hourly. Zoom back in. I labeled the small a right here. Let's just get rid of this and write it in by hand. Small a, targeting wave 4 of the previous trend, right? Or actually, this, okay, there you go again. Here we go. This was an extended wave 5, as you can see right here. 1, 2, 3, 4, 5. So we're targeting wave 2 of the previous wave, okay? So wave 2 is targeted with this A pivot, and if you zoom in, you're getting another flat correction, okay? So you got another flat correction. It's 3 waves here. I would say 3 waves here, okay? And now you're looking for 5 waves for the end of that trend, okay? So we're seeing the same thing. Okay, let's get rid of this. And remember, this morning I was like, oh, this is a 1-2-1-2. Can no longer be a 1-2-1-2 because this is retraced beyond even the origination of that wave 1, and that's a rule, one of the 3 rules in Elliott wave theory. Wave 2 can never retrace beyond 100% of wave 1. Okay, it doesn't matter if it's a regular 5-3-5-3-5 or a diagonal, never. Okay, so we have 5 waves up, and I think that we have 3 waves down. And now let's measure the retracement, and we do have a maintaining of the golden pocket. Golden pocket maintained. You have your A wave, I'm going to circle it. Your B wave, circled, just to, keep all of the degrees straight. And then this is the impulse that we want to zoom in on to find out if we have a completion of the trend, okay? Once again, we're looking for 5 waves here. Let's look for 5 waves, and let's count them out. So we have 1. Okay, we have a quick zigzag in 2. Okay, I think a 3rd wave here. 4th wave here. relatively complex given the simplicity of wave 2, and a wave 5. Okay, this works for me. Wave 3 is not the longest, but it's not the shortest. Wave 5 is shorter than wave 3. Okay, so that is another reason. You always want to go back to your basics. The 3 main rules in Elliott wave theory. There are only 3 rules. There's a lot of things said, a lot of guidelines, a lot of trends, a lot of sort of patterns, but there are only 3 rules. First rule is wave 2 cannot retrace beyond 100% of wave 1. Second rule is wave 3 doesn't have to be the longest wave, but can never be the shortest of the 3 waves. The third rule is that wave 4 cannot go beyond the top of wave 2. Okay? If you satisfy those 3 rules of Elliott wave theory, then you're good. Then it's all about tendencies, probabilities of guidelines, alternation, proportionality, right? But you cannot have a valid wave count with any of those 3 rules broken. Okay? I think there's like one exception of a wave 3 being slightly shorter than one of the other 2 waves that are, as an example, in the wave theory, Prechter's wave theory, and all his decades of experience. But just say, by and large, 99% of the time, those are unbreakable rules. Okay, given that, I think that this is a valid wave count. Once again, the story remains: you have 5 waves, you have 3 waves. These 3 waves are your B wave of this portion of your reversal pattern. This is your A wave, this is your B wave. You're looking for reversal here. Okay? So again, we're seeing the same thing. We're seeing consistency throughout the market. When you see something like this, you're likely onto something. Okay? And this, I live for this kind of stuff because I do analysis every day, and I look for patterns, and when I find a pattern that's so strong, it shows up in all the different markets, I start buying more or selling more, or doing whatever. I'm like more convinced that, okay, I'm onto something, right? So once again, what I want to do is I'm going to take the Fibonacci extension of these 5 waves up. Actually, I'm going to stop here because it goes, this is the orthodox end of these 5 waves, because A starts here, it retraces here, it goes like this. Or let's see. No, that's false. I think A goes all the way up there, up here. Okay, and I would retrace it down here, and so I'm expecting C to come in this region. Again, the C wave of a zigzag I've seen go as far as 2236. Okay, I've seen go much beyond the 1618. So I'm just guesstimating that it may come in this region 1236, 1618, but I would not be surprised if we got massive C waves, and that signified the bona fide impulsive start of this out of this reversal pattern, of these reversal patterns that we've been in for the past 40 days, right? You have your double bottoms here, boom, 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 right? That's just effectively what you have on a larger time frame. You can even say it's a triple bottom of sorts, okay? And that's your pitchfork reversal that people talk about. And if you zoom out, you also see a rounded bottom. That's how you get rounded bottoms with these reversal patterns, these AB flats, with these reversal consolidation sequence of corrective waves. Okay, so that's the projection. And if we had to project the time similarly to the other assets, it would be something like this. Let's see. Actually, sorry, I'm pulling it from the wrong place. It'd be something like this. It's hard to catch. Alright, there we go. Requires patience, like everything else in trading. Okay, if this is the end of the B wave, okay, if it took just as long, it would find its maturity on the 1st of July, okay? If it took 1618 as long, it would find its maturity on the 3rd of July. In any case, I don't expect this next move up to last too much long, or to take too long, given the fact that it's likely to be super impulsive, 1. 2, just going by our moon phases indicator, we're coming into a new moon, so I expect, the top of this next move, that's likely to be a big move up, to occur in the coming days, okay? So again, consistency in the analysis, okay? Last but not least, unless anybody's made any sort of requests, last but not least, Ravane. All right, log is on. Let's zoom out for a second just to get some context. Okay, and once again, you have your 400-day heinous reversal pattern, or sorry, your heinous downtrend. I think Ravane is special in this. It may be already in impulse. And the only reason I say that is because volume is crazy. However, this asset is not as popular. There's not as many market participants trading this as others. So that may explain the large spike in volume. So, all things being equal, gun to my head, I would say this, like the others, is in a sort of zigzag. 5 waves, 3 waves, or some variation of 3 waves, right? Because we call, in Elliott wave theory, we have complex corrections, double threes, triple threes, and there's a reason we call them double threes or triple threes, because it's a variation of 3 wave corrections, okay? Even though a triple three is actually 5 waves, and a double zigzag is like, if you count it out, it's 1, 2, 3, 4, 5, 6 waves. They're still double and triple threes, right? So everything that's corrective, it's in group of threes, all right? Just not to confuse anybody. Okay, so we have big A here, okay? Big A of your reversal pattern. Big B of your reversal pattern, right? I think that's safe to assume. On the daily time frame, I think it's clear that this is small a of your pivot. This, what you're getting here, is small b of your pivot. But it's small b of the pivot in a zigzag, so what we've gotten until now is to be expected, which is a respect of the golden pocket. All this time. So 10 days straight of consolidation, 10 days straight of testing the 618, okay? It's likely to continue from that, using that as a base, okay? Another reason, and here's a cool thing that you can do, okay? So let's say you're confused, you're not exactly sure. is this an impulse and then a wave 2 correction going into wave 3, or is this an A, B, C zigzag? The idea of using the principle of proportionality, where waves of the same degree tend to be similar in time and price, would help you. And that, using that, it scores a point for our thesis that the entire market is in a zigzag. And let me show you why. Guys, if you're getting value, please like, share, and subscribe. I honestly don't see anybody else talking about this to this extent. Some people, maybe Dan Dowd, touches on some of these aspects, but I really don't see this depth of analysis that kind of uses advanced Elliott wave techniques in a simple, practical way. Okay, I think a lot of Elliottians out there, no disrespect, just find the most complex scenarios and go on about complex low probability scenarios, or they give you a slew of 100 different possibilities, like you don't, or probabilities, like you don't know that anything is probable, right? Or possibilities, but you don't know really how possible or probable these possibilities are. Anyway, I'm not shitting on other analysts. I'm just saying I don't see this type of analysis anywhere else. That's it, for what it's worth. So by the guideline, and I do say guidelines very carefully. I don't say the law. Some people kind of sloppily say the law or the rule. There are only 3 rules in Elliott wave theory. This is why I call them guidelines. They're just guidelines. They don't have to be, they're not 100%. Okay? So you take the time it took for this impulse. It took 2 days. So in 2 days, Ravane went from whatever it was, 255% pump. Okay? In 2 days. After that, it took you, and it's taken you, like I just said, 10 days to correct on the 618. So by the guideline of proportionality, that waves of the same degree are similar in time and price, this is a violation. Okay? Again, it's a guideline. So not to say that there's not some example out there where price, some asset was in impulse and then it underwent some crazy complex correction that took 5 times, 6 times as long as the impulse did. But it's unlikely. And again, these are just educated guesses. And the more you can use your understanding of the wave principle and the guidelines and the rules, the better and the more accurate your guess is. So by that guideline, it's unlikely that this impulse took 2 days and this retracement took 10 days or 5 times as long in a proper impulse. It's likely that this is an A wave and this is a B wave. You guys see how I did that? B waves are notoriously slow and long, and they plod along and they take their time. They don't care. B waves, like the B waves, the longest and the most nasty, treacherous B waves are in gold. If you look at gold's chart, it takes forever, like years and years and years in correction, in going sideways and undulating. It's painful. So yeah, I'd say that just based off of our knowledge of what an impulse looks like, although this is super impulsive, this looks right. In totality, this does not look like a wave 1 and wave 2, given the time taken by this WXYXZ 333 correction. I hope that was helpful. This is something I've gathered after years of research, years of analysis, years of trying to put the pieces together, right? And hopefully that helps you in your analysis if you're using Elliott wave. So yeah, that's it from me. TLDR, I see zigzags, and I see the end of these zigzags. I see running flats. I see ending diagonals. I see a lot of bullishness. Yes, the price is going sideways to down, but I'm extremely bullish. And I think it's a great idea, probabilistically, right, to accumulate at these levels given what I'm seeing in the charts, because it's more likely than not that the next move, the next big move, okay, is up. The next big move is more likely than not to be up. All right. So that's it for me. I hope this was helpful. Hope this was useful. Definitely like the stream. If you're live, if you're not, like it. If you're watching on the replay, let me know what you think. Let me know your comments, your questions. Love to hear from you guys. And have a great Tuesday wherever you are. Take care. Bye.